FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. It's Kerry Lutz. And we've got old friend Dave Kranzler back. Hasn't been on in a while. Want to talk about those employment numbers from last week that were so deleterious to the gold price, because we all know that when employment is skyrocketing, it's bad for precious metals. And Dave, welcome back. How are you?
I'm well, thanks. Thanks for having me back on the show, Kerry. It's always a pleasure.
Hey, sure. So we created 257,000 imaginary jobs. Man, the economy is just going full steam ahead. It's just a mystery to me why the, I'll throw a couple things out there. First, the head of Gallup said that the 5.6% unemployment number is propaganda, and he can't abide by it anymore, and he's worried that he might be disappeared as a result of his newfound burst of honesty. And number two, obviously we see that the labor force participation rate is doing the inverse of the unemployment rate, and it's all bogus, right?
Oh, it's completely bogus. There may, if there's maybe any grain of legitimacy to the report, it's that, they count part-time jobs in that number. So I saw a study a few weeks ago that discussed how Walmart has been cutting 3 full-time jobs and replacing it with 5 part-time jobs. So the BLS would pick that up as a net gain of 2 jobs, even though obviously 2 plus 2 doesn't equal 5 there in that case. And they're doing that to get around Obamacare. Mm. And the other thing that I found incredible was that they reported, 257 jobs in January, and yet their nefarious and notorious plug number, the birth death model, actually showed jobs lost, which means more companies died than were born in January. And they usually use that as a plug to boost their number. And then you also had, a huge spate of layoffs announced. Obviously, everyone knows about the energy sector with a ton of layoffs. But retailers also, several smaller retailers, besides Radio Shack, which isn't a small retailer, went bankrupt in January. And there was a huge amount of retail layoffs during the month. So I just don't know how they can justify saying that the economy produced 250,000 jobs in January when obviously it didn't.
Yeah, I've given up even looking at the number. It's ridiculous. If they really wanted a real number, they have it within their power just to look at all of the tax remittances for the month, for the quarter. It's a survey, and as a survey, it's just silliness. And we've seen it for years now. It's just political propaganda. And when the head of Gallup is coming down on it, you know that the emperor is starting to lose his clothes on this one.
That's exactly right.
So what the real
you all just real quickly.
Yeah.
Well, just real quickly, you did mention the labor force participation rate, and obviously that hit a secular low not seen since 1978. So essentially you've got about the labor force participation rate dropped down to like 62.5%.
Right. Yep. And the guy's saying, yeah.
You have, millions of people that just leave the labor force every year. And so they're not even counted as part of the unemployment rate calculation. And a lot of these people leave the labor force because they can't find jobs and their jobless benefits run out. So they just disappear.
Mm-hmm. I mean, the guy's talking about things like if you work 10 hours, you're no longer considered unemployed. The guys who work, engineers work an hour a week, you're not unemployed. All the things we've been talking about for years, Dave. This guy finally comes out and says them. And it's just absurd that these government statistics are granted any weight. And then once they come out, then the algos take over on Wall Street and jack the market up, right?
That's exactly right.
Yeah.
That's exactly right. And just one more little example here of how phony this number is. A while back, Obama came out and said that, well, the reason why the labor force participation rate has dropped like this is because the 55 and over category, they've all made so much money, they're opting for early retirement. So they drop out of the labor force.
Yeah.
Right, because the labor force is defined as, I think, between 16 and the age of 16 and 65. So people over the age of 55 are leaving the labor force. Well, in fact, a colleague of mine did a study, and it's a video that's posted on my YouTube channel, my Investment Research Dynamics YouTube channel, and he delved into the numbers, and as it turns out, the highest growth rate for employment is actually in the 55 and over category. Because not only are these people not able to afford early retirement, a lot of them have to go back to work to make ends meet instead of retiring.
Yeah. I see them here in Florida. They're greeters at Walmart. They're cashiers at gas stations. See them all over the place, Dave. They're not retiring. So the theory is that 10,000 baby boomers per day are retiring. I know that's the bandied about general wisdom, generally held belief, but I don't believe it because
it's just the opposite. It's the fastest growing, right? It's the fastest growing segment of employment, the fastest growing age segment for employment. All the other age segments, the labor force participation rate is declining. In 55 and above, it's actually increasing.
Yeah, exactly. And yeah, it's just, as he says, the big lie here. And there's a lot of other big lies taking place. Like you said, the birth death, where it's actually going up, not down, and so much more. But that's the government sponsored propaganda that takes place day in and day out here, right?
That's exactly right. I actually, the video that my colleague did, I have it linked on my blog post that talks about Friday's non-farm payroll report.
Yeah, just tell us where to find that, because that's a great point.
It's investmentresearchdynamics.com, and it was a post on February 6th. So if you scroll down a bit, you'll find it.
Mm-hmm. And you just have to look at the U6 unemployment, which again doesn't begin to capture it all. It's really that labor force participation rate that captures the full breadth and extent of unemployment. And you just have to look at your neighbors who aren't working all over the place. People aren't working. And
that's right.
Yeah. So it's there, and that's what we're seeing. And then you can see it in the housing numbers too, right?
Yes, absolutely. It's what happens is these organizations, the government, and then organizations like the National Association of Realtors or the Census Bureau, which tabulates new home sales. What they do is they go out and they take a sample of data for a given month, and they're just taking a population sample, and then what they do is they apply some sort of seasonal adjustment to it, which no one knows. Only the people inside these organizations, probably the computer programmers, are the only ones who know exactly how the adjustments work. Then they take that number for the month that's been seasonally adjusted, and they convert it into an annualized rate.
Mm-hmm.
And for anyone who knows anything about constructing, a statistical data series, every step of the way, every time that there's room for error that's introduced, when you adjust the data and then annualize it, you compound that error factor.
Yeah. Oh yeah. It's there's no justification for seasonal adjustments. There really isn't when you get down to it.
Well, if you just took your data samples from the Northeast for housing, yeah, you'd want to adjust it a little bit because obviously home sales in January or, home sales around Christmas time are going to be lower than, in the middle of the summer.
Mm-hmm.
But conversely, the Southwest, especially the Arizona market, obviously the best time for home sales are going to be really mid-December through mid-February, and that's coming from someone who has a second home there.
Yeah.
And he, by the way, said his realtor buddies down there are telling him the market is dead.
Mm-hmm. Yeah. So seasonal adjusting has just become a way of seasonal manipulation, right?
Exactly. It just, and again, it's just absurd to me. But if you look at how the headline numbers are reported for existing home sales and new home sales, they report the annualized rate of sales.
Mm-hmm. Yeah.
And again, it's a completely fluffed up number.
Oh, I know.
With just, it's a viper's nest of statistical measurement errors.
Yeah. Yeah.
And I've actually emailed the National Association of Realtors, say, can you please, go through with me how you do your seasonal adjustments? They all use the same statistical software. You can get the name of it in the footnotes on all these reports, including the government. And they don't even answer my emails. They won't tell you how the calculations are figured out. They won't tell you what the adjustments are. So we have no way of looking at it and saying if there's even any grain of legitimacy in them, which I doubt there is.
I wonder why they won't tell you, huh?
Exactly.
Why? What do they have to hide? Well, here at the Financial Survival Network, we have nothing to hide. Hey, when we return, let's talk about the stock market, Dave, and precious metals on the Financial Survival Network.
FSN Radio. It's all about what's next.
Just when you thought gold and silver were never going higher, they're back again. All the experts and naysayers have been telling you to invest in stocks, but gold is back over $1,300 an ounce, and silver has broken through $18, and they look like they're going much higher. And when it comes to buying gold, silver, or diamonds, I go to Cloud Hard Assets. Tom Cloud has been in the business over 38 years. Call him now at 800-247-2812. Tom's service is outstanding, and you can buy with complete confidence. Order today, and you'll have your metal in your hands in 10 days or less. Tom takes the guesswork out of what to buy, and you'll buy at the lowest possible prices. And as a special to FSN listeners, you'll get free shipping and insurance. So call him today at 800-247-2812. That's 800-247-2812, or find him on the web at cloudhardassets.com and tell him Kerry sent you.
The Financial Survival Network. It's all about what's next.
If you're just tuning in, just joining us, we've got Dave Kranzler here. You know him well. You find his work over at investmentresearchdynamics.com. And Dave, stock market, you've been doing a little bit of work on Amazon.com, while others of you out there might be ordering products, which I do kind of regularly. I like the convenience of it. There's a reason why the products are so cheap, and it's not because of Amazon's high profit margins, is it, Dave?
That's exactly right. I just put the finishing touches on an exhaustive report that delves deeply into the parts of Amazon's financial statement that no Wall Street analyst would ever dare to go.
Huh? Where wise men dare to go.
Right. Well, part of the reason, I wouldn't say they're wise men. I just think they wouldn't even know how to do the analysis.
In quotes. In quotes. But seriously.
But just to qualify this, I'm like you are. I order from Amazon, as much as possible when I need something because it's convenient, but they can get a product delivered to me
2 days
for the same price or cheaper than a lot of places that I would have to drive to and go get the same product.
Yeah.
So why wouldn't you?
Yeah. Like,
Right. But as it turns out, they're spending a lot of money and not making any money in order to do that. And my report goes into extensively. I show, how that's the case. And since 2004, Amazon's operating income margins have declined from 6% down to 0.2% for all of 2014. And they're essentially hemorrhaging cash right now. And as evidence of that, they did their second bond deal in 2 years in 2014. They did a $3 billion bond deal in 2012 and a $6 billion bond deal in 2014. And it never fails to amaze me the benefit of the doubt that the stock market is willing to give Amazon, because in its 21-year history now, it's never really made any meaningful money.
Right. Yeah, well, that's the thing I've never understood. They're like the airline stocks. Just one more year, next year, all this investment's really going to pay off, right? It's really going to pay off. Robots, they're the most efficient
another industry
company, right?
Yeah, well, that's another industry that's always been financed with Ponzi finance, equipment leases, and they just keep rolling them forward.
Right. Well, where would Boeing be without that? You wonder. When your customers are broke, when your customers are all broke, how wealthy can you be? Right. Well, I guess pawn shops do a good business, right?
For now.
Yeah. Pawn shops are all doing well, but eventually the piper's got to be paid, and you can only be as wealthy as your wealthiest customer, I guess.
That's right.
So they're kind of a chimera, an illusion of profitability. But, I'm looking at, okay, granted, I'm not looking at their actual financial statements. I'm looking at their reconstituted financial statements here on Yahoo. They got a lot of depreciation, a lot of investment in property and plant and equipment. Where's all that property, that plant and equipment? Where is it going? We'll get it.
Well, they've spent a lot of money over the last few years on fulfillment facilities. The thing about this company is they always, every couple of years, they roll out a new idea and they plow a ton of money into it, and they don't make any money on it. And that's what keeps happening. I mean, Jeff Bezos has to be the greatest snake oil salesman in history.
Yeah, I'm just looking at it, and they just, I don't know how it's the most bizarre cash flow statement I've ever seen, other than looking at a big.
It's actually it's highly misleading, and I go through their cash flow analysis in depth, and these guys, again, I show how it's essentially set up as a Ponzi scheme. I call it a Ponzi scheme dressed in drag. Well,
they really do. When you're looking for products, if I can't find it on eBay really cheap, then I go to Amazon and get great deals on the stuff, right?
That's right. It's great deals for us, but that doesn't mean the company's making any money.
Yeah, well, hey, that's their problem, right? When you get down to it, right? Who cares whether they make money or not, as long as they give us the prices, but destroying retailing in the U.S. pretty much.
That's right.
Single-handedly, like Walmart did. They're like the new incarnation of Walmart when you get down to it, pretty much.
In a way, I don't actually, that's another interesting point that I didn't even bring up in my report, is that Walmart's going to start taking a run at them, their online business.
Really?
Huh. And, Walmart has a lot more financial weight than Amazon does.
Oh, sure.
To give you an example, I mean, Amazon's trailing 12-month revenues are $483 billion.
Mm-hmm.
Amazon's revenues for its 2014 year was $88 billion.
Right.
And Amazon actually produces operating income.
Yeah.
Amazon barely squeaked out any operating income, and it lost money in 2014. So I think Walmart has a little more access to capital that it can, apply towards going after Amazon's online business. And that's actually a whole facet that I didn't even explore.
Uh-huh. Yeah, well, there's a certain way of doing business online that isn't transferable just because you've got a big box store. You know that. So they might be able to do it. Walmart, I mean, they've been online for years already. I've bought stuff from them online. They're going to have to invest billions, which they have, in order to chase a market that has no profit. But maybe they need to do it just to get rid of Amazon so they can expand their margins again. I don't know.
Again, as I show in my report, I mean, it is probably a market that has profit, but Amazon isn't pricing its products. They're pricing their products to generate revenues, not profits.
Yeah.
In other words, the cost of getting a product off the website and into your mailbox or delivered to your front door, the cost of that exceeds what Amazon charges for the product.
Uh-huh. And
that's why I say it's a Ponzi. Exactly. At some point, it's going to hit a wall, and its revenue growth is slowing down. I think that's when it starts to run into trouble.
Yeah, you can't lose money forever. Just look at GM, look at Chrysler, the rest of them. Eventually, you got some big problems there, and it's going to catch up with you, and you're going to have to go out of business. You can only do this as long as the markets are willing to loan you money, right?
That's right. That's exactly right.
Yeah, then there's an aha moment, and they say, wait a second, you're not making any money. You've never made any money. And you say you're going to make money the next time the economy turns around, but you never do. So, we're through with you. And markets are very fickle, unlike the U.S. government, where you have to loan them money whether you like it or not. You have to pay your taxes, right? Amazon, right. There's no coercion factor there. You can pretty much say to Amazon, we're through with you, goodbye, and that's it. But Walmart going into it, I don't think it's the wisest move because I think online businesses historically have low margins to no margins. They're money losers, as is basically Amazon proving to us time and time again. They just keep coming up with the new thing, and that just brings in more investors, more money, and more losses. And then, like you said, Bezos comes up with a new thing, right?
Yep. He comes up with a new thing. I call it the pixie dust that entrances stock investors.
Isn't that amazing?
It's really the hedge funds that are pushing and driving it.
Yeah.
Yeah, it's incredible. It's just incredible.
I find that remarkable that he could do it, that he can, that he can wave the magic wand and just scare up more cash.
Right.
That's pretty cool that you could pull that off. He's got a talent. He's got a talent. Whether it's constructive or not, we'll leave that for history to write the postscript on. But Dave, tell us about your website, services you provide, and how we connect with you.
Sure. My website's called Investment Research Dynamics, investmentresearchdynamics.com. And it's essentially just sort of a truth-seeking. I publish a lot of truth-seeking articles, a lot of economic analysis, and then I also have some stock research reports that I offer for sale on the website. I specifically focus on the mining stock sector and the home builders, and I'm going to start with this Amazon report. I'm going to start branching out into more special situations because there's some insanely overvalued stocks out there that, if investors are patient, you can make a lot of money shorting them.
All right. You'll find the link, as always, in the show notes to the interview on financialsurvivalnetwork.com. Good luck with the site, Dave, and we will talk with you again soon. Thanks so much.
Thanks for having me, Kerry, and I look forward to coming back.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.